Hey guys, welcome to another Ichimoku Cloud analysis practice. Today I'm looking at the euro-dollar pair. My name is Kiana Danial. I'm the founder of the Invest Diva movement, and I'm the author of Ichimoku Secrets because Ichimoku is my favorite go-to magic button to see where the markets are going. Now, when it comes to my investment strategy development, I normally look at the markets from 5 different points. I call it the Invest Diva Diamond Analysis, also known as the IDDA. The first point is the fundamentals. And the fundamentals we already found out on Tuesday. We had a bunch of mixed data. We found out in the US that the US international trade deficit was actually down $4 billion. But on the other side, the US consumer confidence has fallen for the fourth consecutive months. And then from the Eurozone, we actually had some data from Germany, which actually showed that the consumer sentiment in Germany picked up again on November. So that was good. Tomorrow we have the US GDP. So it's kind of mixed. And when you look at the chart, you see that also happening. Now, before I switch to the chart, I do want to take this time to say that trading in the financial markets involve a risk of loss, and you should only invest and trade the money that you can afford to lose. Trading Forex is especially high risk. The only reason I'm showing you these charts right now, number one, is for practicing Ichimoku because I use Ichimoku across all assets. But with Forex, I do it every single day because I create investment strategies for a broker called Tickmill. So while I'm doing that, I thought it would be super cool to share with you my analysis process so that you can practice Ichimoku and technical analysis. But I do use Ichimoku across all assets, and currently I am not trading Forex. I just create the analysis and strategy development. So with that, let me go ahead and share my screen with you. All right, so as you can see here, I have the euro-dollar pair. So here's what has happened. Something that's interesting is that we had this potential reverse head and shoulder bullish reversal pattern forming on the daily chart. The daily chart is my frame to go because it's longer term. Even when I used to trade Forex, I used to look at the daily and then zoom out and in to see what the market sentiment is. So this has kind of been countered right now because the pair just confirmed a break below the Ichimoku cloud. Now, a break below the Ichimoku cloud is normally a bearish indication, right? But the future cloud is bullish here. And we have this 78% Fibonacci retracement level of 1.099 that is acting as a support. We drew this Fibonacci retracement from this most recent downtrend that started back in June and ended back in October. And we've been kind of looking for this to turn into a bullish reversal. It still hasn't. And what's worse is that the pair actually crossed below the Ichimoku cloud. Now, how low can this go is the next question. And so I'm going to cross in and out in a bunch of time frames. In the 4-hour chart, you see that the future cloud actually is bearish. So that means that the pair could actually go at least to the support level of 1.099 in the 4-hour time frame. We also have the Tenkan line and the Kijun line break and crossing over. The Chico span has crossed over. So we have a bunch of bearish indications in the shorter time frame. When we zoom out, these are my notes for our premium investing group, the PIG members. If you're a PIG member, you probably have seen this. So on the monthly chart, though, things are kind of different. On the monthly chart, the pair broke below the monthly chart back in June. So this is more recent from a very long-term frame. The future cloud is thinning, and what's really cool is that normally, so with the Ichimoku cloud, and you look at the Ichimoku cloud based on the time frame that you want to invest in, right? But so we normally, after it breaks out, you normally have a period of a correction. And the correction already happened, and now it's going back down. So from a very long-term point of view, euro dollar is actually bearish. So now you have 3 kind of time frames all pointing into so many different directions, which is leaving us confused. So my recommendation at this point is that even though the Ichimoku cloud on the daily chart is bearish and the Ichimoku cloud on the 4-hour chart is also kind of bearish. Well, I mean, actually, to be honest with you, the Ichimoku line on the monthly chart is also bearish. So we have a bunch of bearish indications here, but we have this technical analysis of a bullish reversal. So it's kind of mixed. Personally, I'm not feeling it. I would wait for a break below this level of 1.099 before making a bearish move on this pair. So that was my Ichimoku analysis for you guys today. Thank you so much for joining. Make sure to like this video. In the comments, let me know what you think about Ichimoku, what you think about forex trading, what do you think about the euro-dollar pair in the future, and what else did you see in the chart that I probably missed out on. And so go ahead, let me know in the comments. I publish videos every single day on this new channel, so make sure to subscribe and turn on that bell button so that you don't miss out on my stuff. I do a combination of technical analysis, we talk about money, mindset, and we also talk about investing, we talk about cryptocurrencies, we talk about so many different things. So I cover everything you need in order to become an Invest Diva, to join the Invest Diva movement or the Invest Diva movement if you're a guy, and make your money work for you. So make sure to subscribe. I'll see you again tomorrow.